what people are starting to realize now is that they're getting their energy bills and they're seeing that, hang on, I thought energy was going to get cheaper with this renewables rollout. This is not happening. My energy bills are actually going up. At the end of the day, it's always about the economy. It's always about the cost of living. People can virtue signal and say, I would like to have this, but if it costs a certain amount and you can't afford that cost, then you're going to go with what's pragmatic and what's possible. Countries with energy intensive industry understand that renewables are almost a security threat to the ongoing economic dominance of their manufacturing sectors or whatever it might be. This idea that coal demand is going to fall in 2, 3 or 4 years' time and fall quickly is not going to happen. So what happens when the investors or the producers of coal have that as their forecasts? Banks aren't lending to them. The capital markets are very disinclined to lend to coal companies. So there's not a lot of new supply coming on. So the thesis is simple. There's not a huge supply coming in the next few years, and the demand will stay probably higher than what the market currently expects.
The energy transition is falling apart. Net zero looks ever more absurd. Governments and companies are falling over each other in their rush to cancel renewable energy projects. And voters are electing governments that make abandoning green energy official. Not everyone is surprised by all of this, but what is surprising is the lack of an emerging alternative. If we're abandoning renewable energy, what are we transitioning to instead? We can't just give up on producing enough electricity for our economies, can we? Nuclear power will take decades to get up and running. Gas prices are already eye-watering in Europe. Norway wants to keep more of its hydropower for itself. And Europe can only buy so much cheap Russian gas without looking downright evil. My guest today believes that coal is due for a comeback, and he recommends to his subscribers to buy shares in a specific subsector of coal stocks. Greg Canavan, thanks very much for coming on.
No problems, Nick. It's good to join you, mate.
So you better introduce who you are, how we know each other, and sort of some background details about you, because no doubt after saying what you're going to, you'll be accused of all sorts of things on the internet. You'll be threatened in all sorts of ways. So convince us you're a nice guy first.
Well, Nick, we've known each other for quite some time. I've worked with the Australian arm of your business for the best part of 15 years. I'm the editorial director here at what we call Fat Tail Investment Research, and our job, like yours, is to try to find investment ideas that are not particularly popular. And when things aren't popular, that means they are generally good value. So speaking of coal, just to give you some background on that, I have followed the sector for quite some years now. And the genesis of me getting interested in coal was when the whole renewables fervor sort of started up post the pandemic. So in roughly 2020, 2021, obviously with the oil price collapse at the time, you saw fossil fuel prices collapse as well. So that means coal, gas, all those companies were completely obliterated in terms of their share prices, and their earnings were obviously under the pump as well. And the market had moved all the capital into these emerging green technologies. So at that time, I recommended some coal companies. I recommended some energy, electricity and gas utilities in Australia. They were very much out of favour. Contrary to what you might think, though, I didn't get a huge amount of pushback on that. And that's probably because part of what I do is communicate clearly to my subscribers what I'm trying to look for. And they're investment opportunities that people in general shun. And as I said at the start, when people shun investment opportunities, as long as the underlying fundamentals are strong, you can generally get a pretty good long-term investment opportunity. Now, in those cases, it did take some time for those investments to work out, which is part of the, I guess, risk of being a contrarian investor. Sometimes you have to sit in positions for 6 months to a year, and sometimes even longer, not knowing whether you're dead wrong and stupid or whether you're just a little bit early. So I did think I was dead wrong and stupid there for some time, but it worked out all right. And I continue to follow the coal companies, and they continue to do well in terms of their underlying economic performance and the dividends and cash flows that they're producing. But as we'll probably get into later, we have seen a pretty big retreat in prices of both metallurgical coal and thermal coal this year. And I think that's opening up another good opportunity for long-term investors.
Yeah, so this isn't an ideological climate change obsession with coal type of story. This is a fundamental analysis valuation type of story. That said, the politics is plenty of fun. Let's start by exploring the crash that's played out in renewables so that we get some context here. Because just as the 2021 period experienced this upswing, since then things have gone pretty badly.
Yeah, that's right. And again, it comes down to the economics of the projects. You take offshore wind. I mean, people have been saying for years offshore wind is very, very high cost for the amount of electricity that produces. For many years, because of the subsidies and because of the low interest rates, that those poor economics were I guess, shrouded in those other things. And obviously there was a lot of momentum behind it, political momentum, social momentum. And I'm like everyone else. Who doesn't want a clean environment? Who doesn't want the nirvana of clean energy, clean electricity? But I'm also a rationalist, and I understand that you're not going to get that by creating these hugely capital intensive forms of energy capture. And if you think about, and the way I always like to sort of position it is, if you think about the Industrial Revolution, that was essentially an energy revolution. That's when coal started to be used. The steam engine was invented. Coal was used on a mass scale. The cost of energy plummeted, and that created this huge economic upswing for the world. What we're doing now is reversing that, and we're going to more energy diffuse forms of energy capture. So whether that's through solar, whether that's through wind, yes, the actual sun and the wind are free, but you have to invest significant amounts of money in creating the wind turbines, creating the solar farms, hooking them up to the renewable grids. If you've been involved in this for any length of time, you'll know all this is quite simple. But a lot of people who come to it with an ideological viewpoint thinking, why can't we just do this? Why can't we create or capture the wind and the sun and have it very cheaply? It just doesn't work in the way that the technology is currently set up. Even the batteries at the moment, yes, the battery technology is improving, but it's not improving to the point where it can replace these very large and very efficient fossil fuel systems that we've got. So I can't remember what your original question was, Nick, but the economics of wind and solar are just not up to scratch, which is why you're seeing in high interest rate environments, people are starting to say, why are my bills going up so much? So there's political backlash. Now there's more concern about, maybe the economics aren't cracked up to aren't what they're cracked up to be. And this is where you're starting to get this pushback of all these, the ideology that created the groundswell in the first place.
Yeah, it's worth mentioning some of the real specifics here to give people a flavor. And the sorts of stats that I found preparing for this interview was that so far we haven't actually made much of a dent in terms of how much fossil fuels we use. In fact, they're still growing. Wind and solar are still only producing 2.4% of the world's primary energy, which includes the oil in cars and so on and so forth, not just electricity generation. We've had a huge gas boom rather than a renewables boom. We've got companies now really, like we have BP with the activist investor trying to get them to dump their renewables projects. We've got Equinor, which changed its name from Statoil, also avoiding renewables now. Solar farms are being abandoned increasingly rapidly, the existing ones. I'm starting to wonder whether the total amount of renewables is going to start falling in coming years, given the speed with which projects, up and coming ones, are being abandoned, but also existing ones. Then we've had the political change. We've had Trump, we've had the election in Germany, we've got the upcoming one in Australia. Why don't you take us through what's going on actually in Australia with the energy priority shift at the political level?
Well, it's interesting because the political party that is very much behind the shift to renewables, and their goal is to have, I think it's 82% renewables by 2030, which is not going to happen. And that's something that I've been saying for many years. And most people with a common sense, rational viewpoint have had the same view. So it's not necessarily a crazy or an outlying view. It's just that, if you see what needs to be done, it's just not going to happen. The social backlash against this renewables rollout is starting to become a lot more prevalent in Australia now. The political party is still pushing ahead, but if you look out into the regions, there's a lot of community. I I'd say, anger and angst against the rollout, because in Australia we have to build huge amounts of transmission lines to connect these distant and regional solar farms and wind farms, and they call them renewable energy zones, to connect them to the main grids. So that's causing huge amounts of community conflict. So and no one expected this to go smoothly. Like, you can't re-engineer your electricity grid without having some form of problem. But I think what people are starting to realize now is that they're getting their energy bills and they're seeing that, hang on, I thought energy was going to get cheaper with this renewables rollout. This is not happening. My energy bills are actually going up. So that and at the end of the day, it's always about the economy. It's always about the cost of living. People can virtue signal and say, I would like to have this, but if it costs a certain amount and you can't afford that cost, then you're going to go with what's pragmatic and what's possible. And I think we're starting to see that first shift in Australia away from the sort of the utopia view. This is what everyone would love, compared to what is actually realistic.
Yeah, there are two ways to reach a renewable energy goal. If your goal is, say, 80%, one is to build lots of renewable energy, and the other is to cut the amount of fossil fuel energy. And it seems to me that if we're not going to be building all these renewable energy sources as fast as we thought we could, because they're not economic, well, they might try and reach that goal in the other way, unless the politics changes. So we've got this election coming up in Australia that might change things. On the financial side, we've also got an absolute crash in clean energy stocks. The clean energy ETF, I think it's beta shares or iShares, is down 2/3 since 2021. This during supposedly a renewable energy boom. In this video, we're largely going to ignore nuclear because of the timeframes involved, the amount of time it would take to get the regulatory approval and then construction and so on and so forth. Because I just think we're going to be in trouble in terms of energy long before that. And so the question is, what's going to fill that void? And that's really what I think people are getting worried about now, having gone on this ideological journey to no man's land, I would argue. Your idea is that coal is going to fill some of that gap. So take us through how this could happen, how this could play out, the investment thesis.
I guess the investment thesis is as simple as the expected drop-off in coal consumption is not going to occur as quickly as the forecasts currently expect. So if you go back to 2020, there was an expected drop-off in coal at a certain number of years hence. 2021, that had changed a little bit. 2022, it had changed again. Each year, that expected drop-off in coal consumption is not happening, and it's getting pushed out further and further. So the reality is, in my mind, you mentioned nuclear before. In my mind, the biggest threat to coal is the quick rollout of nuclear energy, purely because it is the best, most efficient form of replacing cogs. It's baseload power. Renewables, I don't think, are a threat to coal, purely because countries with energy-intensive industry understand that renewables are almost a security threat to the ongoing economic dominance of their manufacturing sectors or whatever it might be. So I guess the simple thesis is that this idea that coal demand is going to fall in 2, 3, or 4 years' time and fall quickly is not going to happen. So what happens when the investors or the producers of coal have that as their forecasts? Banks aren't lending to them. The capital markets are very disinclined to lend to coal companies. So there's not a lot of new supply coming on. And this, I'm talking for thermal coal, which is used in energy generation, but also for metallurgical coal. Because as a part of this renewables rollout, there's been this fantasy that we can create green steel. That's not, I mean, it might happen in 20 or 30 years, I don't know, but it's certainly not going to happen in the next 4 or 5 years. So again, there's not a lot of new investment in metallurgical coal. So the thesis is simple. There's not a huge there's not a huge supply coming in the next few years, and the demand will stay probably higher than what the market currently expects. Now, that doesn't mean in the short term you're not going to get price cycles, and we're going through a price cycle now with the slowdown in China. And their steel manufacturing in China, that's hit the metallurgical coal price. In the last couple of months, the thermal coal price has come down quite strongly because the stocks that are held in China The inventories are still quite strong. China's not consuming as much. Whether that was the winter wasn't as extreme as expected. This is just what happens in commodities. You go through periods of plentiful supply, and then you go through periods where consumption picks up a little bit, works through the inventories, and then you're on the other side of that coin. So at the moment, we've got low thermal coal prices, low met coal prices, which in my view is leading to good long-term buying opportunities in the coal stocks.
In your recent update, you called it capitulation selling, which is sort of a technical term for investors. So take us through what it means and why you're using it.
I guess capitulation selling just means it's almost emotional selling. You're selling because the price has gone down too much and you think it's going to keep going down, so you just get out. And often what it looks like on a chart is that it's just this collapse in prices. So that certainly happened for a lot of coal companies. The higher cost coal companies have seen their share prices fall more than 50%. Some of the coal companies that I've got in my portfolio, which are lower cost and therefore can withstand a lot of this cycle price volatility, they're down 15, 20% over the past few months. So they've come down a lot, but the selling did I guess pick up in intensity over the past couple of weeks, and it's got to a point where it looks like it's anyone who is going to sell is out. It might take a little while for it to bounce back. It might take some time for that buying support to come in. But I feel, and I've been looking at share prices for many, many years. Whenever you get emotional selling in a stock or a sector, that tends to be a good long-term entry point.
The demand story is dominated by China because we've offshored all of our manufacturing there, given the net zero policies. Take us through what's going on in China, because this really dominates the whole story in so many ways, and it really exemplifies what's really going on in energy markets.
Yeah, I guess, this should be taken with a grain of salt. I'm not a coal industry expert. What I know about what's going on in China, I read some trade news around coal. And from what I'm seeing at the moment, there are plenty of supply of coal. There's plenty of stockpiles. Mongolia supplies a lot of the coal to China. China's got a huge coal mining industry itself. But one thing that I guess what I look at from a longer term perspective is that China's pretty much depleted all of its open cut mining. Like, it's been mining coal for a long time now, so it's having to go underground to get its coal. Its coal and Mongolia's coal are lower quality. So they don't produce the same amount of energy as coal does from Australia. So Australia's got very high quality coal in both metallurgical and thermal. And you can see this in the benchmarks. When you see a coal price benchmark, there's a certain price that's received for a certain calorific value of coal. And then if the prices goes down, or if the quality of the coal is weaker than that, you only get a portion of that price. So with the headline price of quality benchmark coal falling significantly, a lot of these coal miners in China will be probably struggling to come up with a decent profits with coal prices at these levels. So it starts to get to a point where they might start to curb their production, because they're actually losing money at these prices. So from the Aussie coal producers' perspective, that's a good thing, because they're not at the high cost part of the cycle. They're low cost producers, so they can withstand these weaker cycles. And then you get the higher cost miners or the lower quality, I should say, the lower quality producers in China, and even potentially in Indonesia, that will start to look at, hey, do we need to keep throwing our supply into this market where the stockpiles are just getting higher? So I think, but the other point to note about China is that it is expanding its coal-fired fleet significantly. So I can't remember, you probably know the actual number, but there's tens of gigawatts of coal-fired capacity coming online this year. And over the next couple of years, there will be more as well. They're also building out their renewables capacity. But as you and I know, what renewables capacity and what actually gets used in renewables are two different things. Whereas coal-fired capacity is very much what they're going to use, because it's a baseload power. And one interesting point about the coal rollout in China is that they've said they're happier to curtail the production coming from renewables at the expense of coal. They want to keep the coal-fired power plants running at a stable rate, because that's how they should be run. Whereas in Australia, the coal-fired power plants are switched off or turned down in the middle of the day when there's a lot of sun, and the renewables are coming into the system, which completely screws up the economics of a coal-fired power plant. Which is why in Australia they're shutting the coal-fired power plants down and they're not investing in anymore, because there is no point investing in a large long life plant if it's second rung to wind farms and solar farms, and it's not looked after in terms of its capital returns. China, on the other hand, knows that they need a reliable supply and are prioritizing the reliable supply and saying that we will curtail wind and solar energy and not coal-fired energy. So to me, that really tells me that China is very serious about its energy security, whether that's supply to cities, whether that's supply to industries. But coal is at the top of their energy pyramid, so to speak, and renewables are underneath that.
You had a bit of an anecdote in editorial meeting this morning about the alternative, which is what's going on in the Western world, where we do curtail the likes of coal and gas in order for renewables to run when it's windy and sunny. And what does this do to the incentive to provide baseload electricity?
Yeah, so the Origin is a large energy utility. It owns the coal-fired power plant in New South Wales and also plenty of gas peaking power plants. So its energy production gives a good indication of, economic growth and all that sort of stuff. And one of the analysts on the call said, your energy production has been flat for the past couple of years. We're hearing all this anecdotes about data centers being energy hungry. Why aren't we seeing your energy production levels increasing? And the answer was, well, there's a lot of renewables coming into the system during the day, or when it's windy or whatever it might be, and we have to dial back our production when that happens. So the result is that their energy production isn't increasing, which is why there's no incentive to keep their coal-fired power plant running, because this intermittent energy is coming into the system. So they're not producing more energy. The whole system is, but they're sitting in the wings, which is why they're now investing in batteries. They're investing in more gas-fired peaking plants. But it's not good for energy security when you build your system around an intermittent energy source. And the reality is that batteries are not at the level where they can replace the energy we need for industry to, maintain operations.
I want to just quickly get back to China. Based on my back of the envelope calculations, even though we hear about China producing or constructing vast amounts of renewable energy, if you adjust for the capacity factor, meaning how often it's windy and sunny, they're actually building more coal, or it's about the same amount. We've got the record amounts of coal power plants getting constructed and approved. I think it was 66.7 gigawatts were approved in 2024 alone. Under construction is almost 200 gigawatts. So it's absolutely massive. And they're bringing old coal power plants that they've decommissioned back online as well. So it's a massive coal boom in China. And that is simply not what we hear about at all in the Western world. And that is a classic example of an investment opportunity, right? When the story you're fed by the media and that's moving the markets versus the reality on the ground is so divergent.
It's not a good news story, is it? I mean, no one wants to point out that there is a very large country that understands energy security and is investing significantly in the very technology that you've told your electorate that is, old news and not necessary. I think the other thing that listeners or viewers should keep an eye out for is you mentioned the renewables in China. The headline numbers suggest that there's huge investment going on in renewables in China with the headline gigawatts. But when you talk about the actual utilization of that, and you'd probably know the numbers better than me, but the utilization of the solar and wind farms is nowhere near 100%. So the actual energy that's being supplied by the renewables investment is a fraction of what the headline capacity numbers suggest, whereas coal is generally 90% or higher.
Yeah, there was a German investigative reporters video, I think it was on Deutsche Welle TV, where they went and checked whether the European Union grants for renewable energy were actually constructing anything. And they basically found a load of empty fields where there was supposed to be all sorts of solar panels and wind farms, which was very amusing. They went and knocked on some doors to ask what was actually going on and got chased out of apartment buildings and when striding through fields where there's supposed to be an office block and things like that. It was very amusing, but that's the reality on the ground again. There's another reason I wanted to interview you specifically about this story, and that's because you focus on the Australian stock market for your subscribers. Obviously, that means investing in terms of Australian dollars, and I believe the biggest opportunity in the world of investing right now for investors outside Australia is the Australian dollar. I believe it's massively undervalued. It's basically tanked because of the Chinese story, and it's going to come back at some point. If you agree with Greg about the coal story, then surely Australian coal stocks would be an excellent way for people to profit from all of this.
Absolutely. Couldn't agree more. I mean, the Aussie dollar is currently around, 63 US cents. And often the Aussie dollar will track the performance of the Chinese economy. So another area of the market that people might not be familiar with is the Chinese equity market. And that has been one of the best performing equity markets in the world certainly over the past few months, and probably over the, maybe 12 months as well. I first recommended a large cap China ETF to my subscribers last year in about June, and I just wrote the update before I got on here, and that's up 40% in the past, not even 12 months. So the point is that the Chinese equity market went through a massive bear market. It started to turn around, and it exhibited those classic signs of a emerging bull market that no one wanted to believe in. Everyone thought, no, it's just, it's going to keep going down. So it's up considerably over the past 12 months. The Chinese government is very determined to stimulate not the economy in the way that they used to. So the old form of China stimulus was property market, steel, commodity intensive. This, I think, is a bit more targeted in terms of wanting to get the consumers back out of their sort of saving and back out of their fear mode that they're very worried about their future. And you're seeing that reflected in equity prices. So to me, the equity market is potentially a leading indicator of where the Chinese economy is going. If that turns out to be the case, the Aussie dollar is going to get on the back of that upswing in the Chinese economy this year. And I think you're right, Nick. I think the Aussie dollar will probably finish the year up in the 70s because the US dollar has had a very strong bull market over the past 12 to 18 months. It looks like it's turning back down as well. So you get a double whammy. And talking about some of these coal stocks, they're on yields of 8-9%. So you throw in an undervalued stock in the first place, and then you throw in a bit of currency, which is obviously a risk. Currencies can go both ways, so it's not a done deal that you're going to get a currency tailwind, but you're buying in at a point where the Aussie dollar has fallen significantly, and it does look like it's forming a bit of a base and moving higher.
You've stolen my conclusion there. I was going to say that we're living in an energy-starved world, and you've got the opportunity here to invest in undervalued energy assets in an undervalued currency. It's the ultimate valuation play. Greg Canavan, thanks very much for taking the time.
No worries, Nick. Thank you.
Australian coal stocks are a huge opportunity right now, but our energy analyst at Southbank Investment Research believes a bigger one may be brewing right here in the UK. Thanks to the advent of artificial intelligence, governments have been forced to acknowledge that energy demand is going to absolutely soar. That has upended net zero goals because it requires a vast investment in reliable forms of energy that can provide the huge amounts of baseload power needed for AI data centers. For once, the UK has a competitive advantage that could actually solve this problem. To find out what it is and how to position your portfolio to profit, click the link in the description or the comments section below. Thanks for watching.